it's like this every single time. Toronto, I got you. I got us. Yeah, on double MG, I fuck a rapper's wife. Have her splitting thighs like she work at Gladys Nice. I was never nothing nice. She ain't even my type, but I made the sacrifice. Yeah, niggas know the real secrets left in hidden hills. Middleman lined it and I cut him out the deal. Bought the whole street up and I got it for a steal. Ayy, turn cutthroat for real. And God forbid I die, man, you boys ain't on the wheel. I was on a ride while you boys are sitting still. I've been on a high while you boys are on the pills. Cold world, baby girl, but I ain't from the Ville. Cold world, baby girl, but I ain't from the Ville. Yeah. Niggas try to copy sound, but they never had to feel. And that's the reason going independent, it just never had appeal. She and me are just like Kobe and Shaquille, but we never even chill. I bought her an apartment, so I knew her like a tenant. All the verses tailor-made for you to get offended. It was never unintended. Backyard Tiger Woods worthy for the eagle. String her ass along, I'll thread her through the needle. Number 2 and 3 is like Madonna and the Beatles. I ain't worried about you people.
What is going on, guys? Today's article is brought to you by Forex Live. S&P 500's technical analysis. This trend line is key for the next major move. The S&P 500 correction extended to a key trend line, bounce or break. Despite good economic data like lower core inflation, stable jobless claims, lower inflation expectations, and strong consumer spending that support the soft landing narrative, the S&P 500 just kept on falling with very shallow pullbacks. One of the main reasons might be the non-stop rally in long-term yields and real yields as it makes financial conditions tighter, ultimately weighing on the stock market. The good economic data might also be interpreted as bad news because inflation might remain higher for longer, requiring more tightening from the Fed. There is no easy answer at the moment, so technicals should be more helpful. So guys, there's a long-term trend line and a short-term trend line, and they have two moving averages. I don't know what period they are, but if you can check, price is below the moving averages and we're at a trend line. So if it breaks that trend line, the next area might be 4,175. On the daily chart, we can see that the S&P 500 was diverging with the MACD right when it was approaching the key 4,628 resistance. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, we are still in the pullback territory as the S&P 500 reached the key trend line around 4,420 level. This is where the buyers should step in more strongly with a defined risk below the trend line to target the 4,628 resistance again. The sellers, on the other hand, will want to see the price breaking lower to pile in even more aggressively and target the 4,324 support. On the 4-hour chart, we can see that if we get a bounce on the trend line, there will be strong resistance around the 4,460 level as we have the confluence of the trend line, the previous swing low level, and the Fibonacci retracement levels. This is where the sellers are likely to pile in again with a defined risk above the downward trend line to target a break below the major trend line. The buyers, on the other hand, will want to see the price breaking higher to pile in even more and extend the rally into the 4,628 resistance. On the 1-hour chart, we can see that we have another minor trend line which is likely to define the sentiment. In fact, if we see a strong rejection already from this trend line and then a break below the major one, the bearish momentum will be confirmed to be very strong and the sellers will have more conviction to target the 4,324 support. Conversely, if the price breaks above it, then we should see the extension towards the next trend line where the sellers will be waiting with an even better risk to reward setup. Upcoming events. The only top-tier economic indicator left is the US jobless claims report scheduled for today. The market has been weak in the past days, even in the face of good data. So we might be at a point where bad data causes recessionary fears and good data leads to higher rates expectations. It's possible that the market is more likely to react positively to data that is not too cold nor too hot. So big deviations might be bearish either way. There you have it, guys. Technical analysis on the S&P 500